Hello traders and welcome to another video review. Today is Friday, January 6th, 2023. Let's find out what is going on the Forex calendar today. The key event of today is of course non-farm payrolls and unemployment rate data from the US. As usual, those data are scheduled for release 2:30. The market participants expect the non-farm payrolls to drop from 263,000 to 200,000, and unemployment rate is expected to stay at the same level of 3.7%. Moreover, before this data are published, there is construction PMI data scheduled for release 10:30, and CPI data from the Eurozone scheduled for release at 11 a.m. The CPI data from the Eurozone are expected to drop from 10.1% to 9.7%. Moreover, there are some data from the Canada scheduled for release as well. Employment change at 2:30, and IV PMI at 4 p.m. At 4 p.m. there is ISM non-manufacturing PMI from US scheduled for release as well. So very busy day. Plenty of things is here waiting to be released. Plenty of very important data, so please be focused today, stay focused today, be vigilant, because non-farm payrolls and unemployment rate will definitely increase the volatility during the data release. So in that situation, let's find out what is going on first on the euro dollar. Ahead of the NFP data release, the euro dollar is quite steady. Nevertheless, we can clearly see that the 100 periods moving average on a 4-hour chart had been still not changed. What I mean is that the price didn't broke above the 100 periods moving average. The average put a cap on the recent rally. We reversed lower towards the level of 1.0511, so we are testing apparently this support here. Nevertheless, that's not the key support. The key support is a little bit lower, around the level of 1.0444. So this is the next target for bears. Of course, the upside is limited. Because of the 100 periods moving average, and eventually this level here, 1.0650. This is the next technical resistance. So very nice consolidation here, then breakout to the downside, then break below the level from the January 3rd. Now we got new marginal low, 1.0507. Nevertheless, it's still too early to say that this move to the downside will prevail, because the NFP data might do some kind of volatility, might add some kind of volatility to the chart, even for the 4-hour chart. So please stay vigilant during this data release. The momentum is already negative. The momentum is at the level of 35, so it's definitely negative. It's strong downside momentum. The level of 50 had been rejected, as you can see here. So clearly the main force controlling the prices right now on the euro dollar is of course the supply, which is why we expect the market to drop lower. So that's the euro dollar. The other pair that might be active during the NFP payrolls is of course US dollar to the Japanese yen. In that situation, on the 4-hour chart, on that pair, we have a test of the technical resistance. As you can see, this is very important. Technical resistance is used to be tested, then significant breakout occurred, then we tested this resistance and new low was made. So if there is some sort of let's say reversal around this level, that's always something negative for this movement to the upside. Looks like a strong, nice movement to the upside, maybe even in 5 ways. Nevertheless, it looks like it's about to be completed. So what we should do is we should observe the level of 134.38. This is the key level in the coming days. We are trading above the 100 periods moving average. Nevertheless, the market's conditions are becoming now extremely overbought. RSI is 69 points. On the euro dollar, RSI was 35 points. So we have the situation when the US dollar is being bought across the board and the euro is being sold, which is why it's helping the US dollar to the Japanese yen to move higher. Nevertheless, both of these markets ahead of the NFP release has hit the extremely overbought market conditions. So from the technical point of view, this market is ready for a correction. So please be careful trading the NFP, because we might have a spike up that will end as a big red candle. Okay, so that might be one of the scenarios here, because we are trading very, very close to the key technical resistance. The other data for today are from Canada, which is why we are going to take a look at the Canadian dollar. US dollar to the Canadian dollar doesn't do much, to be honest. There is almost no specific movement here. We got this test of the 1.3483. We've done the marginal low 1.3469, and since then the market bounced higher towards 100 periods moving average. This moving average is located at 1.3589. So far the market is testing this level. It looks strong, and the breakout to the upside might occur soon. Please notice the fact that the US dollar is again being bought back up across the board. So if US dollar to the Canadian dollar, if this pair is going up, if the US dollar to the Japanese dollar is going up, then the chances for the euro dollar to go down are simply higher. So if this level 1.3589, 100 periods moving average is violated and there's a spike up, the next target is this level, which is 1.3684. okay, and of course we can even go a little bit higher to test even that swing high located at 1.3704 as well. So that's the situation on the US dollar to the Canadian dollar. One last market that might move significantly is the market of S&P 500, of course, right? So right now on the S&P 500 we are locked inside of the zone. Look at this beautiful zone, up and down, up and down, up and down. What are traders waiting for? They are waiting for a breakout. If we take a look at this is 4-hour chart, let's take a look at the daily time frame chart, and on a daily time frame chart, that's the same range, and the market, as you can see, is locked below 100 periods moving average as well. So any breakout above 3,900 roughly will open the road towards 3,933 and even towards these highs above 4,100 points. On the other side, any breakout below 3,763 opens the road towards this low, which is 3,696, 3,631 and even 3,490. So that's the outlook for the S&P 500. It all depends what kind of data will be released and how the market will react on this data, of course. Nevertheless, it still looks like since the beginning of the year the market is waiting for the breakout. Beginning of the year, end of the December 2022, the Christmas period, all of this is one big consolidation here in this very, very narrow zone. So the breakout might be strong, the breakout might be severe. So all of these swing highs and swing lows might be tested very, very soon. Please stay focused, stay vigilant during the NFP data release today. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.